Hello, 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 hello. Mic test. Mic test, mic test. Hello, 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 hello. Hey, watch YouTube. Can you hear me? Hi. Okay, thank you. Let me just start the screen sharing properly and set everything up as it should be. Okay, you should be able to check out the share screen page. Oh, I have some comments here, but it looks like the comment section is acting up again. Hello, sell the whatever that is, and hello, Darwise. So can you guys confirm if you are able to see the screen? There should be my website visible. 50s.com should be visible there on screen right in front of you, white and white what do you call website, black bar on top of it. Okay, Drwals is saying it is working, and so is the confirmation on YouTube from Watch YouTube. And in that case, let's just quickly move ahead. And let me give you a quick introduction, guys. So, one second. Let's get over the legalities first. So here's the disclaimer listing that all content presented here will be for educational purposes. I'm not soliciting buy or sell. If you want to use the views presented here for your trading, investing, or any other purposes, then you yourselves will be liable for your loss of profit, etc., etc. You can read the rest of it. So now that we are done with the legalities here, let's quickly move ahead with the introduction. My name is Nigdev Yadav. I am the admin and founder of 50eyes.com, which is the website where I share my views with the public. And I'm also the founder of 50 Years Market Analysis YouTube channel, where I post my views related to markets. I'm also the author of the book called Think with the Markets. A little bit about my achievements thus far. If you have been following me, then you must remember that I always open up my 6 years track record. Just keep in mind that this track record is here to show you how much expertise I have with Elliott Wave, which is the methodology which I use for analyzing and trading the markets. Keep in mind, I am a trader first, and I use Elliott Wave day in, day out for my trading. The analysis which I do is publicly available, and because it's publicly available, what we have done is over the years, we have compiled a record of what I have said and what happened or did not. So as you can see, 2016, these are the forecasts I made, and the accuracy of the forecast was 83% something. 27, 17, 87.5%, these were the forecasts we made. 2018, 84.16%, these were the analysis and forecasts we made. 2019, 84.88, these were the analysis and forecasts, a lot of them. 2020, 88.52, lot of analysis and forecasts. You can always check them by going to this link and checking the actual video in which the forecast is being made or the analysis is being made. And that is 2021. One more noteworthy thing here, that my track record stands highest in the industry. For 6 consecutive years, I have 80% plus accuracy, and in this industry, even 60% is considered very high. So that was for my achievements throughout the years. 2022, by the way, guys, is still to be published because 2022 is yet not over. So with that, I'll just now move ahead with the actual webinar, right? And the way we proceed in these webinars is that I will go over charts of Euro USD, followed by some other currency pairs, and eventually after the currency pairs, we move on to indices and commodities, crude oil, gold, and S&P and Nifty. And at the end, generally, we take a look at BTC. So that's the way we proceed with these webinars. So guys, that's about it for my introduction and the way we'll proceed with the webinars. Just one final confirmation from you guys before we start the actual thing. Just give me a confirmation on YouTube as well as TradingView that you can both hear me and see the screen, right? So once I get this final confirmation, then we will go ahead with the webinar. All seems good, even Martin. And what about YouTube? I see there are a number of people who are online. Okay, watch YouTube is saying yes. So in that case, Sell the Rip is saying yes here and see. Thank you for the confirmation, guys. In this case, let's move ahead with our first chart, which will be the chart of Euro USD. Okay. So Euro USD chart. This is the chart we have been following for Euro US dollar. Right. So before we move ahead with what's happening right now, let me give you a quick rundown of what we said the last time when we were checking out this chart. So in the last webinar, when we were checking out the chart of Euro USD, our count was that from this point of reference, which is the price level around 0.95399, and the date is around 28 September 2022. We had what you would call a complex correction in Elliott Wave terminologies, and to be more specific, it is called WXY complex correction, followed by another X and another Z in the upward, making it a triple zigzag. So again, those of you who are not familiar with what these things are, WXY, etc., etc., I'll just make it very clear by drawing it over here in the rough box. So first of all, the W and the Y and the Z are all three-way moves, something like this. So something like this, big leg up, a small leg down, and another big leg up, which is called a W. Same goes for the Y, and same goes for the Z. And all three are joined by what we will call an X wave, an X wave. So the X is basically a connector wave for this three-way move called W, then the three-way move called Y, and then the three-way move called Z. I hope that is clear enough. Now, once this kind of movement is in play, what we look out for is what's the next leg. So at this point in time, we were analyzing the market. Last webinar was done on Wednesday, and the day was November 30th. So on November 30th, let me quickly check what was the price level, etc., etc. So on November 30th, the market was somewhere here when we did the webinar. Okay, we can be more precise, but that is not really required because we are more or less interested in the direction rather than precise time and everything. So on Wednesday, when the last webinar was connected, the market was somewhere here in the price range of 1.03494 something. Same time the webinar was done the same time as is done today. And at that point in time, the analysis was that either the wave X is complete here. If the wave X is complete, then we should go up for the Z. The second outlook was the X is continuing sideways. And in that case, again, it was sideways and then long. So it was a swing long. So to just reiterate or conclude the analysis basically suggested that either we go straight up or we go sideways and then up. So basically it was long and long in both outlooks which we had in mind. So based on that, I went long on this market. I was long until somewhere here, right? Around till the level of 1.05190. I got out because of the simple reasoning that I felt like it could still be proceeding for the X. And we will discuss that later, but I'm just trying to tell you what the trade was. So the trade was that I was able to capture some part of this big leg up. Not necessarily big, but this move up. Let's just say this move up, right? Based on the analysis that there should be a leg up in both of our scenarios which we discussed. Okay. So that was the trade played out so far. However, if the X is complete, then Z generally should give a little bit more upside. So that's why my assumption is right now at this point, or the updated analysis is that the X is somewhere here. It is still continuing sideways, right? And then there will be another leg up once it is done for the Z. So that's my updated analysis. So based on this new updated analysis, what I'm gonna do is I'm gonna enter longs again, or look to enter longs again above this near this last high, let's just say, not above this. So this is the trading plan for now. We are still looking for long trading opportunities in the market, right? And it's all based on the same analysis that we did the last time. So there is not much new stuff here, but that was the trade and this is the analysis. So at this point, I would like to see if you guys understood whatever I was saying. If you did, you can type in clear in the comment section, or if you have any doubts regarding this discussion on this chart of Euro USD, you can just type it in. So I seem to have gotten a response here on TradingView. So the end of X is not needed to be the lowest point of X move. No, X move does not have to necessarily end near the lows. I believe you are stating something like this, that the X should go here and then the Z should go like that. No, that is not required. In Elliott wave progression, the wave X could become an expanded flat. It could also become a triangle. Both of those scenarios would suggest that the X ends somewhere here. In a expanded flat, it will end somewhere here as well as in triangle. And there are, sorry, not expanded, running flat. Just a correction. And in the case of some other flat patterns like expanded flat or some complex patterns, it can go here. So as such, it's not required to go near the lower end. What about the guys on YouTube? I see a good amount of audience here. A little bit more responses will be better. So I think that clarifies your doubt, even Martin. If it does not, you can just type in the comments again. Otherwise, we'll just move on to the next chart. The next chart will be the chart of US EURCAD, right? Euro against the Canadian dollar. Let's have a look at that. Okay, EURCAD. So EURCAD, we were following it. We were expecting or thinking that it might give us some trade as a possible diagonal. This was our point of reference. Price was around, what is it, 1.28713. And the expected pattern was a diagonal. So in a diagonal pattern, the characteristic trait is that we have first leg which goes up, right? Then we have a second leg which goes a little lower, not completely retracing the movement of first wave. Then we have wave 3 which goes higher than the wave 1 high. We have wave 4 which overlaps with wave 1. That is to say that if you draw a box here, you will quickly see that the wave 4 and the wave 1 have some price overlap. Okay, so that's basically the rough structure of a diagonal, right? And in the diagonal pattern, once this 4 and 5 are complete, we expect the market to move lower, right? So based on this analysis, last time when we discussed this chart, I drew this channel because we expected the wave 5, once it's complete, it will break below this green channel, right? And this green channel basically got breached 2-3 times here, but all were false breaks. It was never really established below the channel. The price never established below the channel means it never sustained or stayed below the channel for even one proper candle on this 4-hour chart, right? So this was the problem we encountered in the last webinar as well. So as I said earlier, last webinar was conducted on 28th, right? And I discussed this on 28th as well. And sorry, 30th, sorry about that. So the last one was connected on 30th, and 30th November, somewhere here, we had already seen a false break. This was a false break we had seen in the last webinar, right? So based on this false break, I already said that I'm not going to enter just after the break of this channel because we have to wait and see if the price sustains below it. And to take care of that, I had placed an alert over here, 1.39057. As you can see, it never got triggered, right? The analysis was done somewhere here, as I just pointed out. And because it never got triggered and the price is still moving higher, our analysis for the downside is still valid, but if it keeps doing this, if it keeps forming false breaks, then probably it's doing something else, right? So I'll just move the alert a little bit higher this time. So for now, the analysis is still valid, and for now, the setup is also valid, right? But the fact that it has given so many false triggers has reduced the probability of its success, and that means any move that it makes to the downside can be taken as a short trade below the channel line, but I will be a little bit cautious and I will not enter full size positions for now, at least. That's my analysis. So plain and simple, proper break of the channel. Green channel is a sell opportunity. And stay cautious because the pattern is looking a little bit deceptive. That was it for EURCAD. If you have any doubts, just post them in the comment section. If not, just type in clear or understood. In that case, we will move on to the next chart. It may move down. Yes, that's exactly what we are expecting, at least as of now. What about you, Evan Martin, Sellerip, Darwals? You guys still with us? If you are, I'm looking for your feedbacks in the comment section. And what about YouTube? A lot of people are online, but I don't see them active in the chat. What's going on there? So even Martin says it's all clear. So in that case, let's move on and check out the next chart, which will be US dollar, Japanese yen. So US dollar, Japanese yen. Oh, that made a very strong move here. Let me see first which chart is the one we are following. Okay, so this is the chart we are following on US dollar, Japanese yen. And in the last webinar that we did, I was of the view that this market can still go lower. So let me just point out the times and everything when we were discussing it the last time so that you guys can get a clear picture of what we were saying and what really happened. So somewhere over here we did the last webinar. Fun fact, I was of bearish view. I had shorts when we were doing the last webinar. I had taken losses on those shorts because the market crossed this high, which was my stop out level. And I discussed the idea with the participants of the webinar that I'm still looking to sell this market short near the low, right? And I could have held on to my shorts by increasing the stop loss, but I had no confirmation if it will be reversing from here or here. So because I did not have any confirmation, it could have reversed from anywhere within this boxed price range, this orange box which I drew, right? So because I did not have any confirmation, I booked the loss and later on I re-entered, right? About 3-4 hours before doing this webinar, let me check the exact level by the way. This chart or this chart? I think I have it posted in the Slack group. Let me just check the exact level so that I can just be clear. So this is the trade posted in shorts and then shorts closed in profit. Let me see. Let me load the actual chart. So we closed the shorts in profit around 135.60 levels. Let's see what that is, 135.60. So somewhere here we closed the shorts, right? Entry was near the low or after the low, sorry, not near the low. low was breached. This part of the move I was able to catch. Could have held on more. I knew it could go lower, but I decided to stay in the safe zone and take the easy money. And also, I was involved in multiple other trades, so did not want to make things too complicated. That was a trade on USDJPY. So I am just showing it to you guys, because we actually discussed the same thing and it actually happened. So if you were seriously following me from the last few webinars, you would have been able to catch this trade, right? So that was it for USDJPY. And now let's do the analysis, which I have been running on this thing for quite some time. So this is our take on USDJPY, right? Again, you guys already know what a WXYXZ is. I just discussed it a few moments ago. In this particular case, if this is the wave Z complete, then we gotta have to wait and see for this channel to get broken to the upside. Once this channel gets broken to the upside, then we will have a confirmation. So basically, as you can see, the confirmation is far, far away in time and price. But there is, if you go with the technicalities, then technicality suggests that that is the right way to do things. But on a shorter time frame, we might be able to find some other ways. I personally will look at long opportunities once this price really goes above this channel and sort of stays above it for a while. Then in that case, if there is a pullback, then I might look to enter longs after the pullback is complete and the market takes out the last high, which would be this high. So that's just the setup I have in mind right now. There is no confirmation. It's just all thinking right now. But that exactly is what I'll be doing or playing this market, right? So that's my quick outlook on USDJPY. Again, guys, keep in mind that these setups, I keep discussing them every webinar. And as they develop, I keep updating them webinar by webinar, right? So you gotta come in live, right? Because these are discussed in live market conditions as they are being discussed right now to make the most out of them, okay? That's my take on USDJPY. Again, I'm asking you guys to be more active in the comment section, right? Tell me if you were able to understand all the points I made on this chart. If yes, then just type in yes, understood, clear, something like that. Or just type your questions. Same goes for participants on YouTube as well. Whatever doubts, queries you have on this USDJPY chart, just post them in. Even Martin is saying yes. What about Farshad? What about Selrib, Darwals? And also YouTube has a lot of people who are live, but not much participation. So guys, this is a live webinar, so obviously we expect some participation and interaction. But anywho's, I have the confirmation now, so let's move to the next chart in that case, which will be the chart Euro Japanese yen. Again, another trade that played out, Euro Japanese yen. So this time we had a series of trades that played out like bam, 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 you know. So Euro JPY, if you guys were with me in the last webinar, I had many possibilities, but the main possibility which I discussed was the possibility of a downward movement where we were considering this leg as A, this leg as triangle for B. And then my view was that once this trend line is broken to the downside, we can look for selling opportunities in this market, right? And let me just quickly run down what the time and everything was when we were doing all this discussion. 30th November, right? So somewhere here, we were here already, somewhere here, roughly speaking. So again, this trade also I was able to catch, right? And where did I exit? Yeah, I did not go till the very end. My exit was here. It was what do you call? Profit booking order was already here, so it got filled. So roughly about this much move I was able to catch. Again, I could have just gotten back in, tried to take more downside, but I was busy with many trades at the same time. Generally, I don't like to keep more than 3 trades active in the market at once, right? So when 3 is breached, like I have 4 or 5 trades, then I start to book out even small profits or small losses, or just put a target and a stop loss and leave some trades to take care of themselves. So that was the trade. Again, I'm pointing it out because we discussed it in live market. And you can go to my trading view profile. Let's see. Let's just check that out, how that would work out. If you click on my name and then go to streams. Yeah, this is the stream we did, sixth trading opportunities webinar. And quickly check EURJPY around 30. So I'm just showing it to you so that you guys can use these resources later on for your own studies. So this is the chart, right? So this is exactly what I discussed right now, and this is exactly what we said in the last webinar. So you can just check it for yourselves, right? And see the detailed analysis that we did back then. So as you can see, we did the whole forecast, the whole move we were able to catch. And I have to correct myself. The moment I was pointing was here, but it was actually at 144.62 when we did the analysis. You can see that now, right? So this was the analysis done in live market, and we were able to catch the big leg down. Not very big, but yeah, comparatively it was okay leg down. So that's one way of doing it. And if you want, you can also check my work on YouTube, because these live streams are broadcasted simultaneously on YouTube. So on YouTube also, this is the 6th webinar, the 6th stream of trading opportunities. The red labels here mean trading opportunities webinars. Red label, red label. Another series of streams that I've been doing is the Applied Elliott Wave Webinars with the blue labels. So these red ones are currently being done 3 times in a week: Monday, Wednesday, and Friday. Same time as the current webinar you're attending, 7:30 p.m. IST, 2 p.m. BST, and 6 a.m. PST. So you can check it here as well, right? Whatever suits you. So guys, that was the last trade which we did, right? So many trades I've shown you which we discussed last time, and they have worked out. How does that make you guys feel? Are you finding this webinar useful thus far? What do you say? Even Martin, Farshad, Saldarep, Darwals, what's your opinion thus far? So continuing on with the analysis, Darwaz is saying nice. How about YouTube? I see some people are online. Would like to see some more interaction there as well. So continuing with the analysis of EURJPY, right now, if we remove everything, the simplistic way to look at this is that we had a corrective leg down. The corrective channel's trend line has been touched. So theoretically, it can be taken as a point of reversal, right? Or it generally serves as a point of reversal, not can be taken. So based on that, it looks like we may have completed the corrective leg. And since in the overall scheme of things, we still have some upside remaining for this chart. So based on that, I will be looking for creating long trades on Euro Japanese yen a little bit later, not right now. Let the market prove something to me before I commit some money to it. So what I'm gonna do is I've just moved this alert over here to 142. I think it should be a little lower. 142.60 something. Above this level, I will reanalyze the market and see what it's doing. Is it uh, providing me a viable and strong trading opportunity to the upside or not? If it is, then I'll take the longs, let's say here or here on a pullback or something, and put my stops here near the low. So that's the trading plan for now on EURJPY. We will look for longs. Aggressive traders can enter longs right now as well. It will allow them to have a very small stop loss. Any entry above will possibly double or triple the stop loss. So that's it. We should be looking for EURJPY, possible longs, stop loss, current low. Keep in mind that this channel getting touched does not mean much of anything. It can always go up and then retest it again and maybe again. That's how markets are. That's why I'm saying let's wait for some confirmation. That's for EURJPY. If you guys have any doubts, you can just type them in the comment section. Amin is saying thanks. You're welcome, Amin. So I am understanding that everybody is able to get along and get the concepts we are discussing here. So at this point, before we move on to the next chart, how about you guys show some appreciation if you are liking the webinar? How about you guys hit that rocket button on TradingView and on YouTube, the regular like button? It seems to have only 3 likes, whereas there are 6 people online and many of you are already active as well in the comments. So kindly hit that rocket button so that the TradingView algorithm knows that this content is useful for the community and other traders can benefit from it. How about you, Dervals? Even Martin, sell the rip. I mean, if you guys are liking it, kindly hit the buttons. So that's enough for that. I hope you'll do your part. Let's now move on to the next chart, which will be the chart of crude oil. So in the chart of crude oil, let me quickly load that up on screen. So that's our chart of crude oil. Over here. And what I see is that our setup for the possible longs was triggered here. So that basically means that we have to consider the C complete here, remove this here. And if the C is complete here, then that would mean that the next leg up for the double bracket C was over here in play, which would complete the wave X, which should then later on follow a down leg. So for those of you who are not following this count thus far, by the way, I see no response at all since we discussed the last chart. So can somebody confirm if my audio and video is going through? Because I've asked many things and no activity seems to have taken place. So that's why I would like to see some confirmation either on YouTube or on TradingView. Amin, Darwals, Evan Martin, can any of you confirm if my audio and video is going through? Or anybody on YouTube? Okay, so in that case, let's move ahead with the chart of crude oil. Thank you for the confirmation, Farshad. So in the crude oil chart, as we can see, we have a flat type of corrective structure in play. And from this point of reference, which is around the price of 76.39 and date is 27th September 2022. Keep in mind the data feed I'm using is O and A. If you use another CFD broker, the data will vary a little bit and so will the price levels. So we have the first leg up for A and this is what we are considering the possible B completion. So if this count is the correct count, then we want to count a wave C with 5 legs up. If the wave C is complete, whenever it is complete, let's just assume it completes here, right? If the wave C completes here, then we expect the market to move down. That is the expected progression we have on crude oil, right? So basically the point of discussion now becomes what's really happening from the wave below or the 74.16 low, right? So to check out what is really happening over here, we can go to a lower time frame and try to see if we can figure out some more useful information over here. So what I can see over here is that we may have a possible, it's not very clear. Let me see if there is one more possibility that can be happening here. No. So as such, it does look a little bit too choppy for me to consider this as a wave C. So I am thinking that it might still be continuing as a complex correction and wave B might still be progressing sideways because it can very easily be counted as a zigzag, first zigzag over here, followed by flat, another zigzag over here, followed by another flat, and the last zigzag can be seen as over here. So as such, I'm thinking that it might still be continuing as a possible sideways movement, a possible correction or a continuation of wave B. So what would the best case scenario will be over here? The best case scenario will be in that case be to let it progress a little bit, because if it is continuing as a complex, then it can take many forms. Excuse me. So because it can take many forms, there is not much of a point for me to discuss proper structure here, because it will just change and continue forming more complex movements. But what we can do over here is, there is a simple thing we should do. We can just move our alert a little bit to around 77.33. Below that level, we should be able to reevaluate the market, because more price action data will be available by that time, and then we can then strategize some possible selling opportunities if this market is going to go down. So crude oil, I'll just leave, and we will call it a wait and watch scenario. So not much to discuss on CL. Thanks, Akash Modi. Akash is saying awesome work. So I'll leave crude oil here, right, guys? So I don't think there is any doubt here, because we literally just said that we'll let the analysis proceed a little bit and let it become more clear before we try to drive any conclusions. So in that case, I'll quickly just move on to the next chart, which will be the chart of gold. Again, a setup that got triggered. Quickly check which chart am I following. This is the one. Before I continue, let me have a sip of water. And again, the same request: if you guys are liking what you see, then hit the like button on YouTube and the rocket button on TradingView, so that more people can find this content. We can reach a bigger audience and continue doing this work. Just give me a few seconds. Okay, guys, so let's move ahead with the next chart of gold. Akash will discuss Nifty after S&P, which will be the next chart. So in the chart of gold, we were having the analysis, and this was an A in the last webinar, this was the B, and this was the C. And we also had an alternate count which was suggesting that this was following a 1, a 2, and this was continuing for the 3. And then there were some other alternates which were suggesting that dot 1, dot 2. You get the pictures. There were some bullish alternatives, some bearish alternatives. Price action was somewhere here when we did the webinar on 30th November, right? Yeah, it was somewhere here, I think. Right. So the basic what you call conclusion is that in the last webinar, when we were checking this chart, my view was that if the market takes out this last high, then it will become a long trading opportunity, right? I had some triggers placed around here. What happened is the triggers got fired. I did not take the trade again because I had 3-4 trades running on different things, right? But eventually this market went up. So let's have a look at gold in terms of this move and try to see what this new price action means for us, or how it changes our analysis or perspective of this market. So first of all, I think in that case, we now have to consider this leg as a possible continuation to the upside. So what I'll say is that we have a 1 here and possible 2 here. and this we can then consider this as the continuation of a 3. So if this is continuing as a 3, that means this is the one of the 3. So let's just say Roman 1, and let's say Roman 2 as a B, C flat, and then there should be a Roman 3, 4, and there should be the 5th. So this is our quick outlook on gold, and what I've done over here is I've drawn a 5-wave Elliott wave progression. So a 5-wave Elliott progression would look something like this. And if you look at the chart over here, or the actual chart over here on the left, you will find that we are currently in the 2. So if this count is correct, then we have this 3 remaining to the upside, and then after the 3 we have the 5 remaining to the upside. So that basically means we have 2 possible up legs remaining in gold, and that means we can just be on the lookout for more buying opportunities on this chart if our analysis holds true or correct, right? So that's our analysis on gold or take on gold, and we'll be looking out for more long trading opportunities here. If you guys have any doubts on this chart, you can just type it in the comment section. Otherwise, if you can type in clear, that will make it clear to me that we are all on the same page. So it looks like many people are not online who were in the comments earlier. For instance, I'm not seeing any comments from Farshad, neither from you Amin or Darwal or even Martin. If you guys are here, then why are you not responding? Anyways, what about you, Akash, and other people who are online on YouTube? So Akash is saying clear. Okay, so we have a confirmation. In that case, let's move on to the next chart. S&P is 500. So S&P 500, in the last webinar, we were thinking that maybe we have a diagonal in formation. The diagonal, as you can see, pictured with the white trend lines over here. And I had 2 scenarios which I discussed. And the scenarios were something like this, that if the diagonal is finished really at wave 5, then it could see more downside. So we can look for sell. However, sell was basically our primary agenda. However, the second scenario was that if the market crosses the level around 4024, you can check that in the last webinar as well, then we will be interested in longs, because at that point we do not think the selling would sustain anymore, because it is almost at the last high, right? Basically, if it takes out the pivot, or I should say most recent high. So it did take out the most recent high, and that with such a strong candle. So it initiated longs, right? But these longs are not in trend, because the trend really is bearish. So yeah, these are not longs that we can hold for forever. I mean, basically no trade can be held for forever. But in this particular case, these longs can specifically remain short-lived. But we don't really care about that. We just want to evaluate what the situation is right now. Right now, there is 2 possibilities that I am seeing on this chart. The first one is that this market gives one more high, which is my likely scenario, or hypothesis 1, or high probability scenario as per my understanding. Second scenario is that the 3-legged movement, what we call an A up, B down, and C up, is already complete, and this is the configuration for the A, B, and C's. Right. So where is this configuration coming from? What is this A, B, and C? The A, B, and C is a zigzag pattern. The first leg is A, small pullback is called a B, and the next leg up is C. Right. So this is the standard zigzag pattern, and it is coming because this whole move is part of a bigger correction. right? Which you can just check in the last webinar. We discussed that in much detail in the last or the last as well. So with that in mind, with the case that this is a ABC zigzag, right, in mind, let's look at it further. As I was saying, one second. Yeah. So as I was saying that two cases arise. Firstly, I personally believe it could still be continuing up. That means the C is not here, but somewhere over here. And second scenario is C is complete and then selling begins. So if the C's complete scenario comes into play, then we will only look for that scenario below the low of 39.38. So only below 39.38 will I be interested in looking for selling opportunities in this market. Until that low is not taken out, our direction remains to the upside. That means we can play some option trades because we have a sense of direction. Excuse me. Because we have a sense of direction which is to the upside. So those of you who are options traders would already know how to take advantage of this situation. So long story short, maintain the directions to the upside. Those who are already in longs can maintain their longs with the stop losses around 39.38, right, until further alert from the market, that is until further move below 39.38, we look for longs only. So that was my quick evaluation of the S&P's 500. If you guys have any doubts, you can just type them in the current section. Excuse me. Or else we'll move on to the next chart. So Akash, I don't use indicators as such. It looks like you are here for the first time. So also there is nothing really to look on a MACD, on S&P or any chart. You can just put it below yourselves. No expert opinion is required to read an indicator. Yeah, that is something I can consider. But first we need to see some more participation here on the webinars. Let's move ahead with the next chart. Next chart is Nifty 50. I had a lot of trades placed on this one today, which chart is that? Let me quickly check which chart is the one we are following. Okay, yeah, this is it. Let me clear it out for you guys. So as you can see on the chart of Nifty, our analysis has been running for a possible impulse in the upward direction, right? And the view was that we expected this to be a 1. By the way, this is our point of reference around the level of 18,133. Expected that to be a 1, expected that to be a 2, this to be a 3, and the leg down, big leg down is 4. After that, we expected a fifth wave, but not this high. Our expectation that was a fifth wave is forming a possible diagonal. We had some trend lines drawn already. But the thing is, this market just breached the trend line and sustained above it for quite some long time. It could still be considered as the fifth complete, but I personally think that this kind of movement is a little bit too odd for the diagonal, and maybe we need to reevaluate the counts. Reevaluate in the sense that we need to see if this market is forming an impulse in a nested formation, that is this market is going to have, let me just show you instead of saying things. Something of this sort, a smaller degree 1, a smaller degree 2, dot 1, dot 2, and then again a smaller degree 1, let's say over here, double dot 1, double dot 2, and so on, right? So all of these things aside, let's just first stick with this, right? Because with this analysis also we have some conclusive formations. First of all, we have this trend line, the 2-4 trend line. It is yet not breached to the downside. So it is suggesting that we still have the possibility that this market movement can sustain and go higher, right? So Akash, just let me complete my analysis. Comments can be taken later on, right? In the middle, they are a bit distracting. So I'll ask you to push the comments once the analysis is over. So, okay, so what I was stating was that because the trend line is not taken to the downside, we cannot just say that this uptrend is completely gone or over. However, this correction is a little bit too big for the uptrend. So at this point, what I would like to do is not care much for the whole picture, but focus more on this part at least for once. And I think I have done it on some other chart as well. But just to quickly state, our analysis is suggestive of the fact that we have a possible impulse in the downward direction, right? So let me just quickly check that on the second chart I have, by the way, 1 second. Because I have multiple charts which I am following on Nifty. Okay, there it is. There is the chart which I was following during the intraday sessions. So this chart basically, let me just get rid of most of the stuff. Is excuse me. This chart basically suggesting that we have a wave here and we have a B wave here. And then we have the 1 and 2 and 3 and 4 and 5. So basically it is suggesting that we have a minimum downside movement ABC complete here. So if the market is going to remain in uptrend, then we do not expect this market to form another low. Okay. So basically anyone interested in shorts will have to treat that as the stop loss level for now, at least based on the information we have thus far. So that means in the Monday session, if there is a pullback in the opening hours, then we can consider that as a good buying opportunity. Obviously, we'll have to place the stop losses over here around the low, which is around 18,638. And if the market really has finished the downward movement with an ABC correction, then there is no need to tell the market will go on to new highs, right? So I will not pay much emphasis on it, because if it's going to new highs, it will go to new highs. It has already started making new highs day in, day out. But our shorter term analysis is suggesting that we have a possible low in place already. And because we are not much far away from it, this should be ample enough analysis for us to figure out some long trades in the next session. Those interested in the longer time frame targets, our upcoming target is around 19,400 and the next one is I think 19,900 something. Yeah, it's 19,904. So on the longer time frame analysis, 19,400 should act as a good resistance. It is possible that the market sees a sell-off as well from here. If not, then the next stop will be 19,900. That will be your long-term outlook on this chart of Nifty 50. So that's my take here. So on the shorter term outlook, we are not interested in any sell-off or any shorting until we actually take out 18,640 to the downside. Until it's taken out to the downside, we look for long opportunities only. So that's about it for my discussion on Nifty. If you guys have any doubts or queries, you can just post them in the comments. I'll take them at this point, right? And if not, we'll then move on to the next chart, which will be the last chart also, which is the chart of BTC. Akash has written got it. Prashad has written like. One thing, guys, before we move on to the last chart, I still don't see any increment in likes here, either on YouTube or TradingView. Maybe a technical glitch at my end, but if it is not, and if you are still live and liking the analysis, please hit the like button on YouTube and the rocket button on TradingView so that other traders can discover the content and they can also make use of it. Secondly, I'll just like to tell you that the next webinars will again be on Monday, Wednesday, and Fridays. Timings will again be the same: 7:30 p.m. IST, 2 p.m. BST, and 6 a.m. PST. So I'll post the timings after the webinar is over in the comment sections as well. So if you are still looking for quicker updates, I would advise that you follow me on social media. Specifically, Twitter is good. I do update my timings and webinar schedules on Twitter. And my Twitter handle is 50_EYES. This is the Twitter handle I have. So you can get the updates like these over here about the timings, etc., etc. For those of you who are interested in keeping up with me and every announcement, course, webinar, book, whatever I release later on, should subscribe to the emailing list, because the emailing list is the what you would call sort of an insider's list. Every major update I have, I push it. Excuse me. I push it to my email subscribers. So you can just go to 50is.com/subscribe-emailing-list and subscribe here. Lastly, just a quick rundown of my work. My book, Think with the Markets, is available on Amazon Kindle. If you have the Kindle Unlimited, you can even read it for free. My course is available, Elliott Wave course, which is a video course. You can watch it at your own pace. Personalized classes are available for serious students only, called the training program LT. And a course based on the book called Think with the Markets course is also there. So that's about it. If you are interested in personal classes, you can just send me an inquiry. And once the batch is completely formed, we launch them every 15 days to 30 days, so on and so forth. And the video course, you can enroll anytime. It's just a passive course. So that's about it from me for the services part. Before we check the last chart, one final request: please share the content you found here with at least 3 or 4 people in your social media so that we can reach a much wider audience. So this is our chart on BTC. A very quick rundown. We are following this count, which is suggesting that we have a W here. Let's just go with a simple analogy. We have an A here, a B here, and a C, which is still excuse me, which is still to come into play. So the whole idea is that this market is forming a possible flat structure for wave B, and this is the only scenario where we have some upside, right? At least as per my view right now. Other scenarios which we discussed in a few webinars back were completely bearish and suggesting that this market can fall down a lot to the downside. So those scenarios are still valid. But because this scenario is also in play and is quite likely. It is also what you would call a high probability scenario. So, as I mentioned so many times, there is no real update. The movements seem not to confirm anything. So, we have a support region forming around 15,400, 500 something to 14,400 something. So, within this support region, if the market reverses and takes out this high, then we will be interested in some possible longs, like something like this basically. Then we will be interested in possible longs. Otherwise, we just wait and watch, which is what we have been doing for so many sessions now. So that's it, guys. No real change on BTC count, right? So with that, we have discussed all the charts that we discuss, main commodities, some forex pairs, BTC indices as well. So if you found the content useful, as I said a little bit earlier as well, share it in your social media with at least 3 social medias. Like if you have some WhatsApp or Telegram group where traders are located, you can just share it in that. Or if you have a Twitter handle or Facebook, then you can just share it with tags like hashtag trading, etc., related to trading, so that we reach more visibility. That would be my request here. So with that, I'll end this webinar now. And not the most interactive webinars I have had thus far. So if you guys want to see more content like this, I would request that you join the webinars live and also interact, because that's the purpose of conducting an actual webinar. So anywho's, I'll hope to see you guys in the next one, and thank you for joining in.